everyone. It's Lisa from Been There, Got Out. Hopefully, third time's the charm. Today's guest, Angela Kim, was on with me recently. She's also known as Angela, the credit boss. And we are going to be talking about something that I wish I had really thought about 10 years in court, most mainly because of, I can hear you, I think, Angela.
Yeah.
Um, yeah, I didn't think about educational loans. I know my lawyer had said, "Oh, we can deal with this later," and there went another 7+ years and dozens of court appearances just to try to figure out college, not including all the other stuff. So today we're going to be talking about student loans, but I know Angela, you had said something that really caught my attention, and that's that during divorce our credit gets ruined a lot, even without a difficult ex. So, why does that happen? How can our credit get ruined during divorce? Yet another reason people are now terrified to leave their exes.
Absolutely. Unfortunately, divorce is a big factor when it comes to damaging someone's credit because during a marriage or during a relationship, a lot of decisions are made together and you end up co-signing for student loans for your children together or co-signing on your mortgage together or cars. So if the other spouse is vicious and not very abiding by the law and the whole procedure, they could ruin your credit by defaulting on those things, although it's financially their responsibility to make the payments.
Oh my gosh, yeah. All right, so before we continue, Angela, can you officially introduce yourself?
Sure. My name is Angela Kim at Credit Repair Boss. I'm a senior credit consultant at our law firm. We've been doing this for over 11 years. I'm one of the founding members, and my passion is education, helping individuals and businesses with having correct knowledge of how credit works. And if there were issues that happen, whether it's identity theft or you went through tough times in life, we can help you rectify all of that and build your credit back up to where it should be.
All right, awesome. So, what is a student loan?
So student loan is essentially any type of education loan you take out in order to send your kids to college or grad school, whatever it might be, and that could apply to you. So it's type of education loan you take on and stuff that you don't pay for cash, you utilize your credit in order to finance that.
All right, and how do these loans impact our credit? Because
From
again, I think, oh, it's not going to matter, right? As long as we just pay it.
It does have a big impact because, as you know, college education is very expensive now, right? So if you send one child to college, just to give you an example, even if it's state school with dorming costs and all of that, it could easily run up to $100,000. So you're gonna essentially take that six-figure debt onto your credit. So it's a big impact, especially if it gets, ruined during a divorce or separation, and that delinquency could have a heavy effect on your credit report.
Yeah, I know you just told me something that I was astonished to hear is that it's not even one loan, it's 8 loans per
Absolutely.
child.
Yes. So
What is
believe
that?
it or not, if you sent one child to college, you think to yourself, for 4 years school, you're going to have one student loan on your credit report. That's actually not true. Every semester is considered a separate loan. So if your child went for 4 years, chances are you're going to have at least 8 student loans on your credit report. There are times where it could be more if you got, extra loan in order to, help with dorming costs or other costs involved, but minimum 8 for one 4-year college education.
I'm thinking of all of the things that need to be divided up during a divorce, and Chris and I only deal with high conflict, so it's like exponentially more difficult. Like, I wouldn't even know where to start with something like this. And I know you mentioned something called a Parent Plus loan. What is that?
So Parent Plus loan is essentially when you are taking out a loan for your child. So when you do that for your child, it's not going to show up on your child's credit report. It's only going to show up on your credit report. So when a government is trying to give you that loan, it's a federal student loan at oftentimes, they run your credit, They look at your income debt to ratio, all of those different factors. But that's the most common loan that a lot of parents take out, because what kind of credit would 18 or 19-year-old would have, right, by the time they're done with high school? So that's a common loan that a lot of parents take out for themselves in order to send the child to
All right.
college.
So, often in our situations, one parent actually cares about the child and cares about that kid getting an education, and the other one cares about themselves. So, how do you decide what's fair? Like, how can you divvy this up to make sure that the burden is not completely on the parent who actually wants the kid to get a good education, be independent?
Right. That's a very good question. So just to go back to the same example we gave, if you have one child and you're projecting the whole educational cost for this child's going to be $100,000, well, you should consider having the first 2 years be on your credit report, meaning you do the parent plus loan under your name. And for the latter 2 years, you should do it under your ex's name. That way that 50 and 50 could be split evenly. And if it goes anywhere above 100,000, that's for another talk. But that's an idea, to do 1 year under your name and the alternating year on the other ex spouse's name.
Okay, so why do you do the later years?
It doesn't matter.
It
The
doesn't
sequence
matter.
doesn't matter. You could do 1 year under yours, the other year under your ex. Doesn't really matter. You could do both ways. The
Okay,
sequence doesn't matter.
so let's say that you do the first 2 years on your ex's name and then they don't pay. They don't pay back the loan. What happens to you, or how are you affected
You
by
will
that?
not
Or how is your
be
child
affected.
affected?
You will not be affected. So
What about your kid?
not for your kid either, credit wise, because that parent plus loan will not show up on the child's report. It's only on your ex's report if you did it that way. But obviously, a lot of the times, especially for undergrad, you don't have to make payments on that loan. You start making payments 6 months after graduation. So the ex could try to screw you up as well as your child, but that's likely to happen post graduation.
Mm-hmm. Okay. So the main thing is they can't destroy your credit through the student loan if it's already divided up into, like, I take 2 years, you take the other 2 years, and
Exactly. This
you're
is more of a
separate.
prevention method, what to do coming out of a separation or divorce. So it's good to do it separately. And that's the key takeaway. It's to not do a joint parent plus loan with yourself and your ex. Do the parent plus loan where it's just individually
Mm-hmm.
and only one person is on the loan, not jointly. If you do things jointly, that could lead to many more problems. So try to do it separately. If you are about to go through separation, it's best, again, to do it separately under just your name or just your ex's name. Do not do any joint accounts for any student loan
Okay.
matters.
Now, what about, and we talked about like building credit, and say you've got an 18-year-old who has no credit. Is there any benefit, like a pro or a con, to doing a loan with your child?
I would highly oppose that, because your first credit account for your child is not going to be a positive credit history. It's a debt, right? It's a six-figure debt. So that's not the best way to introduce your child to having credit. It would be best for your child to get a secured credit card where they put money of their own, which you could help them to establish positive credit, unless your financial matters are not up to where it needs to be, and your parent plus loan is denied, and your child has to get a loan on their own, then yes, you would have to do the loan just under the child. I wouldn't recommend doing a lot of that just under the child, especially if they have zero credit. You're kind of starting off with having to have six-figure debt on your credit and no positive credit history.
Yeah.
So that may not be the best, foot in the door.
Yeah. So now that makes me think of, let's say there's been a couple that's splitting up. One is the moneyed spouse. The other one, let's say, took years off to raise children and doesn't really have credit. How can that person even get a student loan for their child? Is that even possible?
Question. Yes, it is possible, and I've helped many clients in that predicament. As long as we understand that you are ready to send your child to school on September, if you get started a few months prior to that, before all the applications are in, certainly we can turn things around and get your credit ready for that. As long as you don't have bankruptcy A lot of the federal loans, it's very difficult for you to get approved if you have a recent bankruptcy remark on your credit report. But we can, review your report to see what help do you need in order to get to the finish line. In this case, would be approval on a student loan.
Well, it's a relief to hear that it's not years ahead of time, because situations like divorce often kind of ambush us, some of us. And so there's no time to plan, especially if you have a child that's about to go to college and you're just like, what am I going to do? My ex isn't cooperating. Yeah.
Early
So,
start, the better,
yeah,
I would say.
right.
Always, I tell everyone, there's no one remedy that could heal everyone's illness, right? It's always all
Mhm.
about the diagnosis. When you're sick and you're not feeling well, you have to go to the doctors in order to get a diagnosis. After the proper diagnosis, you could be put on a right treatment plan that's going to heal you. Same thing with credit. If we look at the credit report, we can have a better understanding as to how many months it would take, or maybe it would take a little longer if you had a very nasty divorce and you need a lot of hand-holding and help with credit. That could really vary the range of time it would take.
Yeah, and as you use that doctor metaphor, think of how many people avoid going to the doctor because they're afraid. They're just like, I don't want to know if it's something bad, so I'm just not going to go. And then
Right.
things get worse if it is something bad.
Definitely. But what I would always say about credit is cash is no longer king. Even if you have a lot of money in the bank, you want to send your child off to college, you don't want to use your life savings to send them off to college. You want to utilize credit, right? So it's all about having a parachute ready, not because you think you're going to get into an accident. It's all about the safety and having it ready in times of need. So I believe in financial independence. And unfortunately, during a divorce, during separation, I've seen a lot of cases where one spouse made a lot of the financial decisions or was the breadwinner for the family, and the other person may not have any credit or horrible credit. You want to make sure your credit is improving or will be improving. That way, when you start your life, a new chapter in life, credit is there in order to help you and your child for student loans or whatever it might be.
Yeah, I mean, I'm hearing it's freedom.
Freedom. Yep,
Yeah,
definitely. We all
yeah,
need freedom. Financial freedom is absolutely important.
right, right. So, is there anything else that we didn't cover regarding student loans that people should know? Like, ooh, I have to make sure I do this, or that I don't do this.
All right, so that's a good question. I think the aftermath is also important. So let's say it's the same child example we've been using. You took out $100,000 worth of debt between you and your ex. What happens after the child graduates? Well, if you did a parent post loan, it's your financial responsibility to pay for the monthly payments. And oftentimes, the payments start after 6 months of graduation. And going back to the prior example we discussed, how many loans are you going to have? Probably 8 loans. If you sponsor your child for 4 years worth of college, you have to make sure you pay on time. Because if you miss one payment while work gets busy or you're traveling, it's going to be 8 late payments on your
Oh
credit report.
my God.
Times 3, because there's 3 credit bureaus. So being on time is going to be very important.
Thank you for saying that. Like, who would even imagine that that could be a huge oops?
Yeah. So do auto pay. I
Yeah.
always tell everyone auto pay is way to go, but don't trust it 100%. If your payments are supposed to go out on the first of every month, actually check the second date of every month that the payments were processed. There are a lot
Hmm.
of the times where, whether it be your fault, bank's fault, the payment doesn't process, and that's going to lead to a late payment on your credit report, which is a detrimental effect on your credit. So be on time, try to utilize auto pay, but also hold yourself accountable to make sure that payment was actually paid.
Yeah. So if you just make little reminders to yourself just to check, it's very simple. I even learned Google Calendar this past year. So if I could do it, anybody could put a little reminder on their
We
calendar.
all have very busy lives. Using
Yeah.
calendar is going to make your life so much easier when it comes to juggling your finances post divorce or separation. It's all on you, right? So you have to make sure that you're on top of it. And I would highly recommend doing auto pay, utilizing Google, whatever platform you use to hold yourself accountable. Set alarms. That's
Yeah.
the way to go.
Oh my gosh. Well, thank you so much, Angela. How can people find you to get help with stuff like this?
I am reachable 3 ways. The best way to reach me is by giving me a call or a text at 516 698 4303. And again, my name is Angela Kim at Credit Repair Boss, and all my information will be also shared through Lisa, but you could also email me at angela at creditrepairboss.com.
Right. And you're on Instagram.
Yes, I am. You could DM me as well, whatever works for you. Here
Yeah.
to help you.
Oh, thank you so much, Angela, for all of these helpful tips.
Thank you for having me. It was great.
All right. Talk to you soon.
I think talk to you soon.
Bye.